The big trigger that the markets here are really looking for is the annual monetary policy, which will be put out by the RBI tomorrow. The RBI, with industrial growth suffering and liquidity still tight, the markets are hoping for a relief in the form of a policy rate cut. But let's go straight across to Simran Gill, who did a poll of 21 treasury heads of banks and CFOs to find out what the market is expecting. Simran.
Well, the markets are pinning their hope on RBI to bring about some change in sentiment, and a majority are expecting that this policy will mark the beginning of the rate reversal cycle. And ET Now polls suggest that 85% are expecting a 25 basis cut in the key policy rates. Interestingly enough, a majority are not expecting a further cut in the CRR, probably because RBI did aggressively cut CRR in the last quarter. And certainly, as far as the quantum of rate cuts in FY13 are concerned, majority expect that RBI would cut close to 75 basis to 100 basis points in FY13. And moving across to GDP, majority is also expecting FY13 GDP to be at 7%. And as far as the liquidity deficit in the system is concerned, we're still close to a deficit level of 1 lakh crore. And most believe that till April end, till government spending actually begins to happen, they will continue to face a deficit of above 60,000 crore, that is above the RBI's comfort level. And lastly, moving on to credit and deposit growth, while most expect FY13 credit growth to be close to 15 to 16%, deposit growth, as we know, has been quite disappointing at 14%. And moving on in the next year, also most expect that deposit growth will be at the same levels of 14%. So let's wait and watch what Governor Subba Rao decides tomorrow, and let's hope for some positive news from RBI. And now let's go across to some of the bankers and hear what their expectations from the policy are tomorrow.
More than policy rates, I would be looking forward to a cut in the CRR rates. And hopefully both of them are there, then I think it would be very big positive for the business sentiment. I would be expecting a 75 basis point CRR cut.
Clearly, if the reduction in interest rates has to be passed on to the customers, then in my view, both the cuts are required actually. That is interest rates as well as on the liquidity side.
Looking at the current macroeconomic situation, one could expect maybe a cut of the CRR.
How much?
Difficult to tell. 25 to 50 basis points.
We are definitely seeing signs of slowdown in terms of growth, more particularly slowdown in investment. So we are hoping that the RBI is going to take some actions which are going to improve the liquidity position and probably do a rate cut, because we need to start spurring the investment cycle again.
Overall, we are expecting that it should be the CRR cut, maybe the 25 to 50 basis points, so that a little bit the liquidity positions can be improved.